Hello, everybody. Thank you so much for checking in. My name is Agabus, and this is your financial channel. I've got a short one here for you today, but I've got a great question at the end. Would love to know your thoughts on this. This article here is in regards to the current real estate market, as so many articles are these days, and it's brought to us from Reuters. The title of the article says, Buyers sought for Signature Bank's $33 billion commercial real estate portfolio. It says the U.S. Federal Deposit Insurance Corporation, also known as the FDIC, is seeking buyers for the $33 billion commercial real estate loan portfolio of the failed New York lender Signature Bank. And if Signature Bank sounds familiar, that's because it was a bank failure that happened in the spring of this year. The majority of the portfolio comprises of multifamily properties located in and close to New York City, according to the regulators. The FDIC has been seeking to sell off portions of Signature, one of the three large banks, as I mentioned, that failed in the spring, since, get this, March of this year. First question, seems like a long time for this portfolio to not have a buyer within 6 months. Is that a question on the overall real estate market? Question mark. The article continues and says later that month, New York Community Bank agreed to the deal with the FDIC to buy most of the deposits and loan portfolios and all of 40 Signature's former branches. And within that portfolio, about $15 billion of loans, which are secured, this will be important, by residents that are rent stabilized or rent controlled. While the commercial real estate industry has been under pressure and rising rents and lingering office vacancies, the portfolio is relatively attractive, according to Matt, who's a president and co-founder of Post Brothers, real estate developer in Philadelphia. And the reason he says that they are attractive is because of that rent-stabilized property. Now, it says here, since the FDIC has a legal obligation to preserve existing affordable housing for lower-income people, the agency said it planned to place all of those loans within joint ventures in which FDIC would retain a majority equity interest in. Second question of the day, should a government agency retain ownership in property? You tell me. Any winning bidders for those ventures would be responsible for managing and servicing the loans, but would have to meet certain requirements to preserve the loans and the underlying collateral. The FDIC says it expects to complete the portfolio sales by the end of this year. A short one today, but again, the question becomes, with the real estate that's happening, rising interest rates, squeezed profit margins on commercial properties, should the FDIC or other government entities, whether locally or abroad, should the government own property? Should the government own commercial? Should the government own property? Should it own these commercial businesses? What are your thoughts and your takes? Thank you so much for watching. Tune in next time. Again, stay informed, stay inquisitive, and stay educated. And we'll see you on the next episode.